Hello everybody, I hope that you are good. A new day, a new update for Bitcoin. These are the levels that I marked yesterday in my chart, and maybe you wonder why. I think I explained it in the video, but basically, below these zones here, there is a lot of liquidity, okay? Why? Because this is the zones where the retail trader is gonna place their stop losses, alright? So it's very likely to see these kinds of deviations, okay? Deviate, then get back above it, test it as support, and then you can go higher, okay? That's what these arrows mean. Okay, this indicates you that there might be some deviations in this zone. You have to look for those. But also, if you lose this zone, okay, and you consolidate below the resistance, then you're gonna go to the next level. Okay, then if you would have done here, then you would be looking for deviations here. Okay, again, if that doesn't work, you know, consolidation below resistance and then drop lower. All right, so it's as simple as that. So this is what I like to keep in mind, this deviation zone, because sometimes it can give you an idea of what you want to look for potential trades. You know, I don't have to tell you sometimes that it's gonna go up and down, because sometimes it's impossible to know. You just have to wait, you know, prepare a plan of two scenarios, you know, deviation or break lower, consolidation below resistance, and then you drop to the next level, okay? So if you have a plan like this, you know, considering both scenarios, this is gonna make you be able to trade both directions, okay? Into longs if there is a deviation, or into shorts if you break below this zone. All right, so that's pretty much what we've seen. Now the problem that I have with this move is if we go into the 1 hour time frame, okay, here you also have this week over here. It got filled with the next candle, okay, and tested as support, okay. That's your signal to go long. So you can always go into lower time frame to look for confirmation entries. Now this is the problem that I have here, and is that if you notice, this pump here has been during the Asian session, okay, and you can see that London is, you know, is doing another push higher. So let's see how this ends up. But just so you know, these Asian pumps usually tend to get retraced. I don't know if it's gonna be today or not. Usually, if it was today, what you want to see is London holding here, okay, holding here, and then New York is when they can set this move. All right, but you can see that London continues pumping. So let's see how London finishes. London still has, let me check how long, around 2 hours and a half of trading. So if they close above here, all right, then we could say that London has pumped also. So you had Asia pumping, London pumping. If that happened, then, you know, it's likely that New York continues the pump, okay, and that will take you to this liquidity pool over here. All right, so that's the one problem that I see with this pump, is that Asia pumped, and I don't trust pumps during the Asian session. And also, again, I talked about this yesterday, but you can see that what they kept doing is, you know, large candle, they retrace, large candle, they retrace, again, large candle, they retrace, more large candles in this zone, they retrace, and now you're having the same, okay? You're having another large green candle, all right? What is this telling you? Okay, this is telling you that maybe they retrace from here, or they might continue pumping here with another large candle, and then they can retrace, okay? That's what it's telling me. And that also is telling me that the market maker is essentially building his shorts with these large candles, okay? By making the retail trader believing that price is going to go to higher prices, okay? So be very careful. I think that in the midterm, it's more likely that we see, you know, I don't know if you want to go to this liquidity pool. We might do something like this, okay, or maybe like this, I don't know. But I think that in the midterm, price is probably going to break lower, all right? That's what I think that the market maker is doing. I think the market maker is building his shorts with these large green candles. That's my theory. I might be wrong with this one. We'll see how it plays out. But at the minute, that's what the chart is telling me, okay? And of course, that will be invalidated. The idea would get invalidated if we break above this zone, okay? And even if we consolidate over here, you know, that's telling you that we want to see higher prices. And that's when people can see their beloved 32K, 32.5K that they're talking about, all right? But for now, I will tell you that. I will tell you to be very cautious here. Don't be euphoric. Don't be very optimistic and very bullish, because these large candles in consolidation at the highs is telling you that they are setting a range to prepare shorts, okay? And even more interesting, you look at this. Let me remove all of this. Let's see if this is some kind of range. Let me see. So imagine this is the range low. This is the range high. Okay. Let's see what the middle of the range is. Okay. So this would be the middle of the range. Let me do it like this so you can see. Okay. That's the middle of the range. You can see that in this zone, okay, it's quite a solid zone because you have here, resistance, resistance, support, support, resistance, support, resistance. You see what I mean, guys? You see what I mean? This is a range, okay? Again, we might come now here, test it as support, we can continue, test it as support, continue higher, okay? Then we might drop, test it as resistance, okay? This is a range at the moment. Now, what happens in the ranges? Usually, we see deviations, okay? So that could tell you the idea that it's possible to see a deviation at highs before dropping, okay? Before breaking below this range, okay? That's another possibility. Now, let's try to be even more specific with this range. Let's see if this idea works. So I want to know now the quarters of the range, okay? Let's try to find those levels. Let's see if this makes some kind of sense, okay? So this could be, this could be a quarter of the range. And let's see the other quarter of the range, okay? I just want to see if this makes sense in the chart with the levels. Okay, and we can take also these levels as strong support and resistance zones. So that will be over there. Fibonacci, we can remove it, and let's try to change the color, maybe to orange. Blue, for example. Something a bit different. Okay. To me it makes sense because you can see here. Here you have the resistance. Here after resistance, resistance, okay? And here you can see support, 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 right? So these are the levels right now in the chart. We are in a range, okay? You can divide the range into two halves or into quarters, okay? That's up to you. But you can see that right now, what is essentially in this range. So that is telling you, okay, that if price comes out of this zone above here, okay, this should be a resistance, okay? Now if you can flip this level, then you're gonna go into this high, all right, and probably see a deviation. Let me tell you something, guys. I think that let me remove this. I think that, remember, this is our liquidity pool that we think it has to get filled sooner or later, because when there is a liquidity pool at the highs, that usually tells you that the market maker is going to revisit these prices sooner or later, okay? They are not finished in this zone. So that is a liquidity pool over there. Market for you. That's your liquidity pool there. And it's as simple as this. If price comes higher, fills this liquidity pool, and then it goes higher, then, the most likely thing is that we see a deviation here, all right? That's what I'll be looking at, okay? Look for a deviation here. That's what I have right now in my mind. I think that it's likely that price comes to and fills this liquidity pool, and if it goes higher, then be ready for that deviation, okay? But in the midterm, I think that we have to fill all these imbalances here, okay? Check out these zones, how many liquidity pools you got here, okay? Even all the way to 27k, all right? That's what I think, guys. I don't know if I'm gonna be right or wrong with this one, but at the moment, this is my opinion, okay? I don't know if you want to also mark these levels here in the range, but they're playing pretty nicely, and that could help you to identify potential entries and, of course, take profits. Now, let's go into high block capital. Let's see if we can find something interesting there. Okay, we're in high block capital, 12 hours time frame liquidation heat map. Let's check if there is liquidity here. Okay, hang on, let me zoom in a bit more. Okay, I see some liquidity all the way to 30,825, 850, and also low, okay, at 30,225. So what I think today is that one of these zones is gonna get taken, okay? Maybe even both of them, right? If both of them get taken, then what it makes more sense is to attack this liquidity zone first at the highs, 30,850-ish, okay? And then they can come for this one, okay? But I think 30,825 is probably gonna get taken today. That's what I think. Now, if you go into the 7 days time frame, let's have a look at this. Okay, wow, that's a lot of liquidity. 29,600. Wow, okay, let me go to the chart now. But I think that's at the week. Let me check quickly. 29,600. Oh yes, I see. That's basically in this zone here, the range lows, okay? I would say that that's basically because, they haven't visited this zone for a while. So there is a lot of liquidity here. Also, if you go into the 4-hour time frame, you're going to be able to see that there is a wick here, okay? This wick here, check it out. This wick is probably going to get filled, okay? It was a candle that it was a bit strange because it had a wick to the upside and to the downside. The wick to the upside got filled straight away, but the one to the downside didn't. So anyway, guys, let me remove this range. Okay, we're going to go into the 4-hour time frame. What the chart is telling me is that we're probably gonna retrace this liquidity pool here. Okay, that's your liquidity pool, and we're also in a range between these two levels here. Okay, so if we retrace this liquidity pool and then price doesn't dump, okay, then the next short opportunity would be a deviation of the highs, and that's when price will go lower to the range lows. Okay, and usually when there is a deviation in one of the ends of the range, then you usually see a breakout in the other end of the range. Okay, so that's telling me that if we see deviation at the highs here, then it's likely that price breaks lower. Okay, breaks out to the downside. Sorry. That's what I think at the moment. I don't see many trading opportunities for today, to be honest. So far, what I can see is that you have to be cautious with these large candles because they retrace them pretty quickly, these moves, you can see. Okay, so you have to be very careful with these moves. Also, it was, all this on here, this pump was during the Asian session, so be careful with that. And of course, you're gonna face some resistance on the way. But I think that sooner or later, this might not be for today, it might be for another day, but I think that gonna come to this liquidity pool before coming low, okay? You can trade the range that I showed you. That's quite safe to trade because you've seen that the levels have been playing out pretty nicely. And also to be cautious because don't jump into shorts too early because I'm telling you, there is a big chance that we come to this liquidity pool or even sweep these highs, okay? So yeah, pretty much trade the range, guys. Thank you so much for watching, and I'll see you soon.